Good morning, everybody. This is Mark, and we're back here for It's a Friday for the morning call, Summer Friday. But we have a slew of earnings that came out last night. One of the biggest, nights of earnings. Number of companies that reported. Lots of mixed results across the board. We'll have to see what's happening in this market. So we have a little bit of a gap up. I have the spider chart up right now, and you can see earlier this week we briefly penetrated that ascending channel. We didn't close below there quite. We didn't close below there, and we're now right back in that channel. So to me, that just means we're getting a little bit of fluff for end of month, I think. That seems to be what's in the cards. That's where we're getting this rally, right back to the smack middle of the range. We are range bound. We continue to be range bound. Yet, I'm seeing leadership lacking, and really, quite frankly, it's just about stock selection in this earnings season. So let's take it to some of the stocks I would be watching this morning or that we were looking at last night. We could start off with one of the bigger winners, Expedia. We know Trip came out 2 days ago, missed earnings. I guess Expedia and Priceline are basically, at this point in time, market leadership. We knew Priceline has been, and for the last quarter, Expedia has regained its footing, and it continues to keep moving up. It's at this morning around 52, 53, new highs. You got to go back, monthly highs. I mean, it's going back. It might be all-time highs at this point in time. Maybe not all-time highs, but certainly in the last 8 to 10 years, you're saying Expedia is at new highs. So best in breed at this point in time. That and Priceline. We'll have to see. Priceline's doesn't have earnings for a little bit. From a trading point of view, you got to wait and see if it holds its gap. 50 would be the place I would be looking to get more involved if it comes back down there. Now, we've been talking about the biotechs a little bit, and Amgen, you could just tell that this company was going to beat earnings, just how it was trading. It's up $2. Again, one of the big dogs of pharma, and it just seems like it's chugging along as a lot of these mid-cap biotechs are. Certainly, it's gapped up today. It just is in a good uptrend. Probably is going to base here for a little while, but looks like around 80 again is the place to get involved. We'll have to see if they give us a trade or tries to do a gap fill. Not really sure. Some losers that I'm looking at, Starbucks is down $5, penetrated its 200-day moving average, which you never like to see from certainly a growth company and big established company. That means it might live below there for a little while. Go back to your weekly chart, and that's where I try to find new levels for this to find some support. Looks like 45 is some support. But look at this, guys. This has been basing here now for, you're talking 3 months, 4 months. Once it breaks below that 50 level, it's probably going to live. There's going to be a bigger move to the downside, which obviously is already happening through earnings. But 45 is the first support level, and 40 is the next. And then you have the 200-day on the weekly, which is around 35. I'm not sure it really hits there. Starbucks from a trading point of view might be a buyable opportunity at some point, but I'm just going to watch and look at the price action accordingly and see what we do. Amazon also has been in the news. We've been talking about, high beta really has been lacking leadership. You had Google came out with good earnings. Apple came out with bad earnings. CMG lost its leadership. ISRG, lost its leadership. So we're just really trying to figure out what the next market leader for us is going to be from the big boy standpoint. Amazon didn't do great with earnings, never really does, quite frankly. Came down, after the market went back down to almost 200, 202, I think, to be precise, and came right back to 220, 223, 222. It's closing. That's where it's at this morning. I don't know if it's going to give you a trade. It's right smack down in the middle of its range. So basically, the ranges I would be looking at are 215. I think it's still safe to be buyable. If it breaks above 225, you might see it move to 230. If it breaks above 230, that's the new trigger buy. But you should be long before that if that's the case. That's how I'm looking to play this stock. It seems like it wants to hang up here for a little longer, at least temporarily. It's up $2. I mean, for Amazon, even though it had big gyrations after hours, it's really only up $2. So keep that in mind. CSTR, another loser. I'll follow Netflix. And now that's below its 200-day. That's an avoid for me altogether. Probably on any rally will be shortable. So I think it's just something to recognize and for people to really keep on track. And overall, guys, you saw some support in the banks the last few days. You see some support in the oil stocks. You see Schlumberger had a good day, breaking out above its 200-day, which it hasn't done in a while. Exxon looks okay. Chevron looks okay. So, seems like money's being put there. It's again, we're having healthy rotation that's happening. High beta's taking a little bit of a break, and that means other sectors are starting to, come into fruition. We keep talking about the home builders. They still look okay to me. Every pullback seems to be viable. The semis also, surprisingly, are interesting from a long point of view, but they're not that sexy to trade. Best in breed, I couldn't even tell you, but you had some, Altera yesterday or 2 days ago, Broadcom, I obviously watched, but they're still hanging below the 200-day. So something to recognize and be aware of. Overall, they're on my radar. The SMH is the ETF to look at, still hanging below its 200-day moving average. So overall, guys, this morning, lots of earnings. I think that's where you focus. I don't think you look for a focus on the overall tape. We might get we're smack down. I mean, if you're looking at my, macro channel, ascending channel, we're smack down in the middle of it. So could we pull in a little bit? Sure. Could we go up a little bit? Sure. I don't see it where I really want to take any, aggressive stance. And so that means I'm just following stocks, and probably the stocks that I'm talking about are going to be the key stocks on my radar. And obviously Apple, I'm certainly going to look at. 580 seems like it stands on the upside for now. 570, if it breaks there, probably gets to 565. So keep that on the radar. On the short side, it's bear. A few more days of this, it is bear flagging. I know it's still it's still the best in breed, but missing earnings, needs some time to digest, and it's just going to take some time. And finally, retail, DEC came out, beat earnings, looks okay. I think it regained its 21 and 8-day moving average. I'd like to see that. We'll have to see how it trades. But some of the other retailers are actually acting decent. You have Coors regaining some key moving averages. Nike trying to get in that gap and trying to, get back to the 200-day, which is around $99. Lulu trying to see if it can possibly get above the 60 level. We'll have to see if it gets above the 60 level. It looks like 62 is in the cards. And then we'll have to see if it regains its uptrend. We'll have to wait and see. But overall, you had Walmart, new highs again. It just seems like that's what I'm talking about every time. Walmart, Johnson & Johnson takes a 2-3 day break. They come back to life. Costco, 2-3 day break, come back to life. Keep these on the radar. They're not the most exciting, but I think it's important overall. And, I'm not bullish, I'm not bearish. Again, I'm stock specific at this point in time. I'm not trying to predict this market. It has fooled me too many times saying, we're going up, we're going down. And quite frankly, it's about stocks and stock selection right now. That's where you're at. So I mentioned a bunch of them today. I think, relatively summer Friday probably will be a little bit slow, but I think you'll have a little bit of action in the morning to take advantage of, and then just stay away, in my opinion. So good luck today, and I'll see you back on Monday.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.